The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 26th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstances of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 8 o'clock in the morning. That's right. If you're listening at the normal time, it's 11:07. Thanks so much for doing that. We'll try to make today's show as pertinent as we can for that hour. Of course, if you are listening live at 8:07, we'd love to hear from you. You can always send me an email, send it out to Steve at TFNN.com, and I'll be happy to review whatever it is that you are interested in. So let's go ahead and get this show started out here. We begin our day, and I like doing the 8 o'clock show because we do things a little bit differently. And we start taking what's going on in international markets and so forth. Right now, we can see you've got a mixed bag with regard to U.S. equity futures. The ES Mini is up about 3, NASDAQ's off 12, 95 to the upside for the Dow, and the Russell is up 6 points. Over in Asia last night, a little bit of a mixed bag. The Nikkei up 170, Hang Seng off 384, and basically flat in the Shanghai. This morning, the FTSE and the DAX are trading to the upside, about 0.5% to the upside for the DAX. Now, the DAX and the NASDAQ are very directionally aligned still out there. So just kind of keep that in consideration as we go through intraday charts and levels of support and resistance. If we take a look at the metals complex, they're trading lower. You got gold off $35, silver $4.50, copper's down 3 pennies, electric crude is off $1.50, natural gas down 7 cents. Platinum and palladium both down 73 bucks out there. Soft commodities are all trading to the upside. Wheat, soybeans, corn, coffee, sugar, cocoa futures. 30-year treasuries up 4 ticks. Print at 118.01. U.S. dollar index, as you can see, is basically flat out there. Let's begin our day by taking a look at what's going on overseas. What are their charts communicating to you and I? So we're going to change my screen here. We'll be on my white background charts momentarily. You should see 5 charts out there. The left-hand panel is going to be the Shanghai. Now, the Shanghai does not have a topping pattern. The Shanghai closed yesterday or last night, as well as the day before, above its green oscillator and change line. And as long as price remains above that, that being 43, 45, 23, price should rally further. So the Shanghai wants to move higher. The Hang Seng, on the other hand, as you can see, the green oscillator and change line at the 26,883 level is really acting as resistance. But the more important thing is going to be this swing point from the trading session of February 6th. If price closes below 26,295.03, and it's likely to at least go test that level. But if it closes below that, it'll trigger an A to B equals CD pattern to the downside. We take a look at the Nikkei. The Nikkei yesterday negated its Rhodes Momentum Indicator top. It had follow through today. There's no reason for the Nikkei not to rally further. The FTSE negated its TD9 count top yesterday. This wants to rally further. The DAX is trading above its green oscillator and change line. It is also likely to rally further out there. So this is not what you would expect to see. Those of you, there are people out there that believe we're about ready to get into the biggest bear market ever. And if that's the case, you'd go back and you'd take a look at the charts and you'd say would not be exclusive to the United States of America. And what did we just take a look at here? You got the markets in Japan that negated tops. The FTSE negated its top. And only one of these 5 indices may be headed lower. The Hang Seng may just be in a consolidation. It may just test that swing low and just continue, in an upper range of a consolidation. So that's what's going on internationally. Let's go from these charts. I'm going to go ahead and shut these down. The international chart, these charts I'm showing, I use a different data feed. It's the reason I don't do it during the regular 11 a.m. show. Just it gets too complicated, but a little bit easier to handle in the morning. So we take a look at the here. I want to take a look at the U.S. dollar index. And we can go back and we could take a look at daily, weekly, and monthly so you can get a bigger picture of things. But here, if we take a look at the euro needs a close below. It hasn't done it. I show the A to B equals CD pattern to the downside because it continues to test the swing point. That swing point I'm referring to is from the day of February 6th, and that low is at 1.1765. If we close below that, we'll get down towards this TD9 count breakout level 115. If that happens, you're going to see the U.S. dollar index really move to the upside. In the case of the Japanese yen, no topping signal as we speak. It could go on to form a TD9 count top tomorrow or early next week out there, but that pattern is not in play just yet. Right now, bar number 7 is the high of the pattern. If we take, but price is trading above, right now it's just an inside bar from a daily standpoint out there. So typically that indicates that the direction we came from is the direction that will continue. If we take a look at the Great British Pound, it has triggered an A to B equals CD pattern to the downside, get us back to its breakout level at $1.33. As long as it does that, makes that move, that will put strength inside the U.S. dollar index. We have seen price rally over the last several days, but it's just rallying, just a counter trend move into its green oscillator and change line. And this is a pattern that has been in place here for quite some time for the Great British Pound. The Canadian loonie, it is traded above its oscillator and change line, may rally further. It does have resistance, as you can see, at this swing point from back on February the 6th. The krona and the Swiss franc both trade above their oscillator and change lines, likely to rally further. Now to the U.S. dollar index, very much like the euro. The euro's got a B point that if it closes below, will trigger that A to B equals CD to the downside, the opposite for the dollar. The dollar needs to close above the swing point from back on February 5th, and that high is 97.87. We're trading right now at 97.62. If we do close above that, then we're going to get an A to B equals CD pattern, gets us up into the 99 level. Bitcoin regaining its profile level. It is closed below the bottom of that daily profile for 2 consecutive sessions. This is a bullish structured profile. When you close below a bullish structured profile for more than 2 consecutive sessions, a counter trend rally would come to an end at the bottom or center. And usually it's the center of the profile, and that's at 71,890. Now, if price is able to close above 71,890, then clearly this current move is not a counter trend move, and price should then rally up towards the 83,070 level. So that takes me back to last week, I believe it was, Brent, or maybe it was this week. Brent in Martinez, California, asked me, is Bitcoin going to go to 50,000 or 80,000 next? And I said 50,000. But I think, but now that we've got this new profile here, and I still believe that to be the case, unless we get a close above 71,890. If we do that, then Brent, if you're listening in, probably not, at B513 in the morning, then we'd likely get up to the 83,070 level out there. So that's what's going on in the currency market. Let's go take a look at soft commodities real quickly here. We'll change over to those charts. Then I'm going to go ahead and convert back to my other data feed. Here you can see you've got a TD9 count top in wheat. But price has already pulled back and found support at its oscillator and change line. Soybeans are negating their TD9 count top. They want to rally further. Corn wants to rally further. You've got a bottom pattern, Rhodes momentum indicator bottom in coffee. That should rally up towards the 293 level. Trade above profile resistance in sugar. That should rally further. And cocoa is got a TD9 count bottom pattern. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstaddt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, folks. It's 8:18 in the morning. If you're listening at 11:18, thanks so much for doing that. Right now, we've got U.S. equity futures. Each of the contracts are trading to the upside just by a tad. S&P's up 5 points, 1 point for the NASDAQ, 100, 112 for the Dow. Russell is up 7 points. Gold's off 35. Silver's down $4. Let's begin taking a tour here of the give me a moment here. Let's go take a look at the daily equity future charts out here. We'll get that screen up here momentarily. Come on, there we go. So now we've got that. Now what we are in here, in the ES-Mini and the NQ, their daily charts really represent the market that we're in. We are in a consolidation market. Markets are consolidating. Those black diagonal boxes that are drawn on the ES and the NQ, those are the levels to be watching out here. Now, with inside those levels, we also have profile areas. So if we take a look at the ES-Mini, the ES-Mini is a slightly bullish structured profile. We're trading above the center. We're trading above its oscillator and change line. It does want to go target the 7,001 level, but we have to take a look at what's going on intraday, and we can identify the levels that price needs to close above in order to be able to make that projection. In other words, there are some short-term topping patterns out there. We'll take a look at those. The NQ also trading with inside its profile, that is with inside its consolidation pattern. Price ran into resistance at the level where within that profile, both buyers and sellers believe there's fair value, and that's at 25,473. The profile itself extends from 24,856 up to 26,090. So it's a fairly large profile. If, in fact, price can close above 25,473, it increases the odds of a further rally, and that further rally would want to target the top of its profile at 26,090. If we take a look at the Dow equity future contract, here we've got an A to B equals CD pattern to the upside. In the case of the Dow equity future contract, yesterday it did go ahead and confirm a new profile. That new profile is actually with inside the prior profile. That is also the message of a consolidating market. You kind of get in the picture here. These tools are excellent tools. The TAS market profiles, not only do they provide us with objective support and resistance, and boy, that is really super important out there, but also gives it that center. So with inside that profile, it delivers different messages. And as new profiles form, they provide us with different messages, such as the Dow, which provided us with a message that matches the ES and the NQ, that we are in a consolidating market. Now, in the case of the YM, it's got a slightly buy zone between 49,013 and 49,252. Resistance is at 49,848, but there's resistance also at its oscillator and change line that is within inside that profile. So what the Dow should do is at least go tag the oscillator and change line. The oscillator and change line right now is printed out at 49,696. We take a look at the Russell. The Russell 2000, what is it contending with? Its oscillator and change line, just as it has for the last week or so. If price is able to close above it, move above it, 26.7650 or 26.74 right now, that would increase the odds of a move to the top of its profile, 26.92. Nowhere in here did I mention anything that is bearish. Why? Because what we have is a message of a consolidation. We've got it in the ES, we have it in the NQ, and yesterday the Dow Equity Future Contract generated the same kind of message for us. Now, let's go take a look at the intraday charts out here and see what battles we've got during the day. And we'll start by taking a look at the ES mini charts out here. And as soon as these populates, what we will see, I believe, is a 4 and 5 hour TD9 count top. And those are the levels that need to be taken out. So here, and it's the same level. And so if we take a look at the 5 hour time frame chart, I think we even took a look at this yesterday and mentioned that by the end of the session, we ought to get a TD9 count top in the 4 hour time frame chart. And in fact, we did that. So price just simply needs to close above 69.8375. If you see a close above that, we are likely going to get up to that 7,001 figure. That's the top of the daily profile. You can see that there's now in the case of both the 4 and 5 hour chart, prices trading with inside their profiles. They're both taking on resistance levels. So I gave you the ultimate level that price needs to close above to tell you we want to move to the upside. Right now, what price is dealing with on the 5 hour chart is the 69.68 level. And I believe we're about the same thing. Let's see, on the 4 hour chart, we are at 69.65. So between 69.65 and 69.68, we've got profile resistance out there. So price is right up against it. Typically, we would see if this is where there's going to be a little bit of a turn, we would see some kind of shorter term intraday topping pattern. Turns out we have one, but it may not last for the next 7 minutes. That I don't know. And it's the 10-minute TD9 count top out here. And that's got a high of 69.6525. So if you want to get real granular, and this is only as of 8:23 in the morning. This is not if you're watching at 11:23. But right now at 8:23, if we do close above that TD9 count top, that's the only intraday topping signal as we hit these resistance levels on the 4 and 5 hour charts out there. If we close above 69.6525, it just increases the odds that we're going to at least get up to the top of those 4 and 5 hour TD9 count topping patterns out there. That's what's going on with the ES. What are you watching to the downside? So that's a great question. I would go with the tops that we have in place. And those are the tops in the 4 and 5 hour charts. So the first levels to the downside that you're watching, take a snapshot of the screen, is the oscillator and change line. The range is between 69.31 on the 5 hour chart, 69.39 on the 4 hour time frame chart. If price gets below that, you can see other profile levels. For example, the 5 hour chart has the center, again, where both buyers and sellers from a 5 hour time frame believe there's fair value at 69.06. That could be a level of support. And below that, you're looking at 68.75. On the 4 hour time frame chart, it's a bearish structured profile. And if price gets below that oscillator and change line at about 69.39, odds favor move to 69.1. Those would be the downside levels that I would be watching. And to the upside, obviously, would be taking out those TD9 count tops. Now, that's the ES Mini. Let's go take the NQ out here. The NQ has been the stubborn one. This one, it's been the indice that has been troubled the most. So let's go see what it is taking on. And we talked about that earlier when we looked at the daily charts out there, and that is that the NQ is taking on the center of its daily profile, that 25,473 level. But you're going to see here momentarily that it has several tops. The 4 hour chart's got a TD9 count top. The 5 hour chart's got a TD9 count top. The 1 minute hour chart's got a Rhodes momentum indicator top. The 30-minute chart's got a TD9 count top. The 10-minute time frame chart's got a Rhodes momentum indicator top out there. So there's a bunch of topping signals out here. Now, let's take the shortest term one first. That's going to be the 10-minute time frame chart. And if the 10-minute time frame chart is able to close above 25,401.50, it'll negate the 10-minute signals it has and suggest that we rally further. I don't see any kind of a topping pattern in the 15-minute chart. In fact, if it rallies, you could form an A to B equals CD pattern to the upside. The 30-minute time frame chart has a TD9 count top, and that says a close above 25,401.50. That would negate its signal, and that would then take us up to the Rhodes Momentum TD9 count top that formed out here at about 5 o'clock in the evening back yesterday. And that high is going to be 25,494.75. So I'm kind of giving you the progression steps of levels that you're watching as price moves either up or down. I'll give you the downside levels to be watching as well. Now, on the 5-hour chart, you've got and the 4-hour chart, you've got that TD9 count top. That's at the 25,494.75 level. That's the ultimate price that if price closes above, that would then get us above the center of that NQ profile, and that could then take us up to the 26,090 level out there. Now, to the downside, really the 30-minute chart makes it the easiest. Why is that? You got a nice TD, got a couple TD9 count tops out there, and you've got a beautiful TD9 count breakout level. And that would be the key support area. That's 25,291.75. If we close below that, then the NQ likely continues to head lower. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks, to the early edition of today's Trader's Edge Show. It's 8:31 in the morning. If you're listening at 11:30, thanks so much for doing that. Right now, we've got U.S. equity futures pointing to the upside. ES Mini's up 6 points, 13 for the NASDAQ 100. Dow's up 105, and the Russell's up 7. You had gold off $38. You've got silver down $4. We've had tremendous market breadth out there. If we take a look at the New York Stock Exchange, the advanced decline line, we just missed closing at another new all-time high yesterday. Right now, again, anyone who uses an advanced decline line, your numbers are not going to match up mine because it depends where your starting point is. But you all should still have the exact same result. No matter where your starting point is, you should basically be or have had a new all-time high that formed back on a couple days ago on February 20th. That reading out there in mine, as you can see, it's in the data box up there at 611,379. Yesterday we closed 611,282. If the markets move higher today, we're likely to see I can't guarantee this, but we're likely to see the advanced decline line also move higher and maybe form another new all-time high. These new all-time highs are really important. Market breadth like this is super important. Why? Because it reduces the amplitude of any kind of retracements over the next month, quite frankly, next 12 weeks, but really over the next 2 weeks, most certainly out there. And that's what's in place as we speak right now. And that's why we've got these choppy markets. Now, maybe the markets are going to get just a little bit less choppy. I don't know. It depends upon what the spot VIX index intent is. Yesterday it closed just by a smidgen below its 50-day exponential moving average. The 50-day is printed at 1794, but the VIX right now, the spot VIX right now is printed at 1761. That provides us with bullish conditions. So as long as price remains below its 50-day exponential moving average, it being the spot VIX index, that being 1794, we're likely to see increased pressure to the upside. What was interesting last night is the close just like a penny or two below the 50-day, but at the same time we had the ES Mini running right up into resistance, trend line resistance. So we can see we're trading, in between both the rising and falling trend lines out there. But with the spot VIX below the 50-day and with the New York Stock Exchange, its advanced decline oscillator, that's the difference between the 19 to 39 period exponential moving average of the advanced decline line. With that closing just above zero, if it closes back above zero today and we get the spot VIX index below the 50-day exponential moving average, boy, that really increases the likelihood of the ES Mini getting up to the 7,170 level. Of course, you can see that descending trend line. We took a look at that on the prior page out there, and you'll see some other rising and falling trend lines out there with regard to the daily equity future contracts. But keeping on the theme of market breadth out there, what the market's intentions are, we probably ought to go take a look at the equal weighted ETFs out here. And here we've got the QQEW. That's the equal weighted ETF for the NASDAQ 100. Now, typically, the equal-weighted ETF points the way. And if it does, well, it generated a Rhodes Momentum Indicator bottom yesterday. It did that when we had a nice little gap to the upside. Now, what price did is price is trading inside its sell zone. And that's between 134, let me give you the exact number, 134.33 and 135.34. If we close above 135.34, the equal-weighted ETF for the NASDAQ will then trigger a bullish profile change in trend. And that'll suggest that we're moving higher. Now, you should say moving higher to where? And the answer is on our charts. It's the weekly profile resistance level that would then come into play. And that's at 136.57. And now a close above that takes us up to the 139.69 area out there. So you do have a daily bottom inside the QQEW. We'll go take a look. If I go take a look at the Qs, we'll go back and forth here. Maybe just, but I'm going to put the Qs up. And I don't believe we're going to see the same pattern. But we'll come back to donut, Krispy Kreme. which does have a Rhodes Momentum Indicator bottom for its daily time frame and a TD9 count that's completing on Friday, confirming on Friday. So we take a look at the Qs out here. You don't see that same Rhodes Momentum Indicator bottom signal out there. That's why it's really important to be paying attention to the equal-weighted ETFs as well, because there, you use them to kind of confirm what is it you're looking for. And as I mentioned, the equal-weighted ETFs typically point the true direction, right? We're not dealing with just the top 10 stocks that inside the NASDAQ that make up 50% of the weighting out there. We're dealing with the other 90 stocks out there. And those other 90 stocks right now gave you a message yesterday that they're ready to take off. And that would only be confirmed now with a close above 135.34. If you look at the equal-weighted ETF for the S&P 500, that's referred to as RSP. There's no top. It's just trading sideways, price consolidating with inside its profile. The current profile formed above the prior profile. Profile-wise, that's a bullish message out there. Nonetheless, you're trading in between 201.36 and 204.76 on the daily time frame. The weekly time frame has negated a TD9 count top. The weekly time frame is trading above profile resistance on the screen oscillator and change line. The weekly chart is in full breakout bullish mode. Yeah, I know we got a consolidation pattern, and we do, but I'm telling you what the weekly charts right now, or what the equal-weighted charts are confirming for us. And man, inside the NASDAQ, you now got a daily bottom. The Russell, the S&P 500, the weekly is saying we're moving higher. The equal weight for the Dow. So the equal weight for the Dow, I could make a case that it has a sell the D point pattern out there. Price is just traded with inside its daily profile. It's got support at 42.69 and resistance in a sell zone between 43.49 and 43.62. The most important chart, though, for the EDOW, the equal weighted Dow, is the bottom panel. And that weekly chart negated its TD9 count top. And we're trading above its oscillator and change line. It's confirming what we just took a look at on the weekly chart for the RSP. So the equal-weighted charts out here, they most certainly are not buying into any kind of process here that we've got some kind of major market top. That's what those charts say. All right, so where do we want to go to next out here? Let's go to, let's go take a look at Donut. So kind enough to have one of our dinners to make a request for Krispy Kreme donuts and coffee. And we were able to go ahead and provide them with that image. But when we take a DNUT, and there wasn't a request to take a look at the charts or anything, but I don't have any requests at this stage in time. So it's really up to Stevie just to kind of figure out what to do next. We take a look at DNUT. That's the ticker symbol here for Krispy Kreme. What you'll see is on the trading session of February 18th, this generated a bullish Rhodes Momentum Indicator bottom pattern. And price has been trading with inside his profile. Now, it's got a sell zone between 305 and 309. If we close above 309, you'll get that bullish profile change in trend, and we likely head higher. If we close above 309, we'll then get above the weekly oscillator and change line. That would then suggest that Krispy Kreme wants to make a run for 359. Now, what you'll see is that come tomorrow, we will have a TD9 count bottoming pattern on the weekly time frame. That doesn't mean that the pattern has completed, because the bottom can form on the bar following bar number 9. But because we've got that daily Rhodes Momentum Indicator bottom pattern, pretty decent odds that we have in fact made a bottom. So you get a nice TD9 count bottom on the weekly, a nice Rhodes Momentum Indicator bottom on the daily, and the weekly, the monthly chart still has a Rhodes Momentum Indicator bottom as well. So Krispy Kreme ready to get on a sugar fix and move higher. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. NVIDIA out with earnings last night, just crushing it out there. And if we take a look at the close yesterday, the interesting thing here is yesterday price closed above the top of its consolidation pattern. So it's basically been consolidating since about the November timeframe out there. Price in the pre-market's trading at 197, so we're even above. Well, yesterday's high is what was it? It was the 197.63. So if we can remain above the top is consolidation. Let's use the price point of 186.15. If we can, no, that can't be it. Sorry, 193.63. 193. Let's call it 194. As long as we remain above 194 out there, what we then have is a consolidation break, a measured move. And a measured move, when you break a consolidation, it's equal to or greater than consolidation. So all we need to now do is just simply move this up. I'd almost have to, I've got to scrunch the chart just a tad here to properly move it. And basically what this says here is that NVIDIA, if it does in fact bust through this consolidation, we get back to its all-time highs and beyond that. Now, when we take a look at the weekly time frame chart, the weekly has a Rhodes Momentum Indicator top. The swing point is from October 31st. On a weekly basis, that was 1.1 billion shares. We still have 2 days worth of trading, but we're at 600 million shares. So it seems like we're moving to that swing point with light volume. Nonetheless, prices trade above its green oscillator and change line. If it closes tomorrow above that, right now it's at 195.11, as well as the top of its profile, 191.22. It's increasing the odds that it wants to rally towards the top of that profile, towards that topping pattern, towards that swing point high for back on October 31st, even with light volume, because that would be a bullish signal, trading about profile resistance at its green oscillator and change line. The monthly chart is trading within sorry, folks. The monthly chart is also traded above its green oscillator and change line on the top of its profile, 190, 191.92 out there. So you got a bullish setup on the monthly, the daily, and the weekly. The only change is if for some reason NVIDIA sells off. And if it does and it gets back inside that consolidation, yesterday's move was a false breakout signal, and then we're just simply back into that consolidating pattern. That is not the message as of 8:45 in the morning. Be curious to see what the message is come day's end. We got a couple of requests out here from S&P. Hey, S&P, thanks so much for providing those. BMNR. S&P is not in either. He's just kind of looking for what the direction is. So BMNR, we'll get those charts here populated momentarily. Of course, if you'd like me to look at your request and listen in at 8:45, just send me an email, steve@tfnn.com. We take a look at BMNR. What I've got here is just price trade. Well, I've got a buy the D point bottom pattern that went ahead and formed on February the 6th out there. That sets your support level, not at the bottom of its profile at 1853, but instead the low of February 5th, 1719. Price is traded above the center of its bullish structured profile. It ought to rally up to 2387. And S&P, if price can close above 2387, 2873 becomes its daily price target. The weekly says, well, hold your horses here. Before I get up there, you'd have to take out the top of my weekly profile, which is 2407. And if you can do that, then it ought to rally up towards the oscillator and change line, gets up towards the 2850-ish area out there. On a weekly time frame, I don't have a bottom. We just have price coming back to this gigantic breakout candle. So if we go ahead and we look at this chart here, this thing really broke out, must have solved something back on July 4th out there. The week of July 4th, this had volume of 219 million shares out there. And prices simply came back into this breakout level. No other bottom signal that I can see here. The monthly chart pulls back and tests the bottom of its profile at 1898. So it may have found a bottom. The daily definitely found a bottom. So at this stage here, I'd say BMNR 2387. No idea what it will do when it gets there, but you've got those other levels, those other battles, S&P, to be paying attention to. So I hope that does give you the information you were looking for. You also want to look at ONDS. So let's get that up on our screen out there. Fletch, thanks for that request for IMVT. We'll certainly take a look at that. We got ONDS that closed yesterday above the top of its profile, but below its oscillator and change line. It's kind of uncertain right now what it wants to do. But if it can close above 1040, the green oscillator and change line, you'll be in bullish conditions, and you should rally up at least to test the swing point from February the 19th. That swing point had 102 million shares in there. Yesterday we tested with 68 million shares. So if you can get inside 1074, you may make a run up to the 1159 level. But if you close above 1159, you'll trigger an A to B equals CD pattern to the upside. Are we going to get above 1159? Well, the weekly time frame chart shows us that in order to do that, price must take out the oscillator and change line. It has acted as resistance during the last 4 weeks out here. There is a Rhodes momentum TD9 count top. By the way, the daily has a TD9 count topping pattern as well, but it also has a TD9 count bottoming pattern. If we look at the weekly time frame chart, the TD9 count Rhodes momentum indicator top took price right back to the buy zone. So this may have bottomed. The may have bottomed would be confirmed only with a close above that green oscillator and change line. And right now that's 1120. And if we do that, then we're likely to go target its Rhodes momentum TD9 count top for its weekly time frame. On a monthly basis, we also are going to go ahead tomorrow and confirm a TD9 count top. Now the pattern completes next month out there. Wow, do we have mixed messages or what? Okay, so ONDS. Your question is really, what's the next direction? What's the next direction? I don't know if there's any pre-market trading really going on. Well, to the upside, I can only say this, S&P. To the upside, the target would be 1120, and to the downside, it's between 808 and 888. It really is the weekly chart. That's really the one I think that is the controller in the game at this moment in time. So I hope that helps you out. Thanks much for your requests out there. We've got Fletch who wrote in, wants to take an IMVT. So let's get that up on our screen, see what we can find there. IMVT. She's trading out at the price point of 20, or closed yesterday, 27.23. USAR as well. Thank you. And but closed above the top of its profile on its green oscillator and change line. And I don't see any kind of hold on a minute here. Hold your horses, Steve-O. So it still keeps the Rhodes Momentum Indicator top in play out here. That's a pattern that formed back on January 9th. So it closed above that high being 2780, negates that signal, says we move higher. The weekly time frame chart has a Rhodes Momentum Indicator top that formed the week of February 13th. It closed above that high, which would be 2792, and negate that signal. You can see that as of yesterday's close, we've got a weekly bearish shooting star candle. We already have a Rhodes Momentum Indicator top out there. Not that you need another one. The key area here for IMVT is going to be that green oscillator and change line for its weekly time frame, 2646. If we get a close below that, we're headed lower. Otherwise, we're headed higher, and if price can close above 2769 and close above, or take out that Rhodes Momentum Indicator top, that means close above 2792. That'll get us up to the 3210 level, and that is ticker symbol IMVT. Steve Rhodes with TFNN. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Welcome back, folks. We got U.S. equity futures pointing to the upside. ES Minis up 8. S&P, NASDAQ is up 14. Dow up 100, and E-mini Russell's up 5 points. Gold's off $40. Silver's down $3.70 out there. I've got a couple more requests to get to before the show ends. Thanks so much for listening live between 8 and 9. If you're listening at 11:54, thanks so much for doing that. We're back to normal programming hours come tomorrow. If we take a USAR, USAR has rallied right up into its green oscillator and change line at 2047. It's traded above the top of its profile, so it's kind of like in an undecided zone out there. A close above 2047 should get us, should lead to a further rally. And the weekly time frame chart is confirming that. It is now trading above the top of its profile in its green oscillator and change line. So that's really the key. It's really going to be up to the daily time frame out here. I apologize. I don't remember who asked me for this. Might have been S&P as well. But you're really watching 2047. You get above that, we should see a further rally. 2492 would be the next resistance level. That is the top of the monthly profile. Let's pull up BGL. Wasn't requested, but it was talked about inside the Tiger's Den. So we're going to go ahead and pull that chart up on our screen, see what it is doing. Not much. I just see price pulling back to its breakout level on the daily time frame. That wide ranging bar with probably pretty good volume. That has volume of 29 million shares. Yesterday, for example, the 200,000 shares. All right, let's finish off the show by taking a Goldilocks in its intraday charts. Gold here yesterday, closing just above the center of its profile. Actually, it's done that for a couple of days out here. So this is not a counter trend rally. And as long as price remains above the center of that profile, that's at the 51.63 level. We may see 55.34. How are we going to get there? Well, we need to take out the TD9 count top on the 5-hour time frame chart. So if gold closes above 52.69.40, we rally further. Otherwise, it just might be sideways-ish type move. Folks, stay tuned. Tommy O'Brien is up next with the morning market kickoff, and I'll see you on Fabulous Friday. But in the meantime, have a terrific Thursday. Take care.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN